Today on The Bite with Nick Marenoski and Michael Sema, sponsored by Getarate, down payments and why 10 or 15 is greater than 20. So today we're going to talk about the myth that a lot of homeowners have or home buyers have about down payments and how they think they need to put down 20% in order to either qualify for a mortgage or that it's the best way to save money. And we're here to talk about some things to consider and the questions that we ask potential homeowners and home buyers about that down payment and what it means to them to either put down less and what that savings in their pocket, not having to part with that money, can mean for them in the short run and the long run. So Mike, why don't you talk about some of the things that you have homeowners, home buyers consider when they're purchasing a new home?
The problem is there are other expenses associated with purchasing a home and being a homeowner that a lot of home buyers don't prepare for. One of the expenses is the closing costs. Do you have enough money to cover that percentage? Typically, that could go all the way up to 2.5% to 3% of the purchase price. Yeah. And another huge expense that buyers don't really prepare for is the maintenance of the home for the first year.
Yeah, so the research shows that new homeowners spend between $8,000 and $10,000 in the first year on either improvements that they have to do or new furniture, appliances. So just be aware that this is something that you might want to do or something that you are planning on doing
or have to do
if it's a repair or an upgrade or something like that. So keep that in mind when thinking that you have to put down the 20%. Yeah. What are some of the other things that we talk about?
No, but before we jump on to the next thing, it's just rule of thumb is always calculate anywhere from 0.5% to 1% of the purchase price when it comes to ongoing maintenance expenses for the home. Anything could go wrong. Plumbing could go wrong, the electrical, you could have a dishwasher that's broken, a refrigerator that might need a repair, or you could just have a bird fly through one of the windows and you have to get a brand new window. There's always a cushion you have to set aside for yourself just so you have enough money that when those things do pop up, you're not scrambling, looking around for some additional cash, or you're not borrowing based on credit card debt just to cover those expenses. So it's always good to prepare in the beginning stages, and that's why we always ask these additional questions to make sure, number one, do you have enough money for the closing costs, and number two, do you have enough money for the maintenance for the first year and ongoing years afterwards. But
Yeah, so if you make those considerations by asking yourself these questions, then you could take a look at other options for maybe 15% down or 10% down and see how that changes things. Because in today's day, you can do a lot of things with lower down payment loans, and it doesn't have to necessarily increase your payment by all that much, and especially with ways to get rid of the monthly PMI expense that's typically associated with loans that are less than 20% down. And I think another thing to consider is that when you're putting 20% down, if that'll deplete all of your savings, maybe it's not the best way to part with your money, because you're essentially parking it in the equity of your home, and that's not as easily accessible than if it was just sitting in a savings. So obviously another thing to consider is, hey, is putting 20% down going to really affect my cushion, my nest egg, my savings, but for emergencies, things like that. So aside from what you're going to do in the first year, the whole first home, in your home, what about emergencies? What about things that you want to feel comfortable about? And that's the reason why at Getarate we go through that affordability calculator to not only make sure that there's money left over, but also go through this down payment options with you to see how things change, so that you can say, hey, maybe it makes sense to keep more of this money aside just in case something happens, downturn or anything like that.
So what we're recommending is always just double check if you are using all your savings for the down payment or to purchase your home. Ask the lender or ask your home loan expert to give you a couple additional options. One with only 15% down, maybe a different one with 10% down, one with 5% down, and take a look at the different payments and see what's really worth it for you. Because at the end of the day, the great thing about it is you could apply as much towards the principal balance as you like and knock down the mortgage as quickly as possible. Some of us get bonuses at the end of the year, and it's easier for us to apply a larger amount, or when taxes come back and we get a nice little check in the mail, we could apply more towards the principal balance. But in the beginning stages, just until you have a really good idea of what's going on with the home, be careful and just make sure you just have some type of savings set aside just to cover you for a rainy day. God forbid anything was to happen.
So to recap, you don't need 20% down to buy a home. And you should ask for options at lower down payment percentages just to see what's there, because you have unforeseen expenses with buying a new home. You have things that you want to do with that new home. You want to make it your own. So you want to buy furniture. You want to buy maybe new appliances. And then lastly, you want more savings. You want something that you can easily access rather than putting it all into your home maybe, and not having as easy access to that in case of a rainy day.
That's it.
That's it.
Good luck, guys.
Thanks for
See
listening.
you in the next video.